I did a lot of study to try to figure out what makes the most sense on the Bitcoin channel, and this is what I found. I want to explain it. Charting is partly a science, which means that it's accurate in some ways, like a Fibonacci repeat. This is something that everyone should always keep in mind. It is what it is, right? You do a Fibonacci backtrack and a high pivot to a low pivot. That's how it works. The number is correct. There is a bit more to it than that when you're drawing trend lines. I talk about some of those things in the Winning Trader series to help you understand how to do it. Michael Saylor, the executive chairman of MicroStrategy, thinks that the SEC's approval of a spot Ethereum ETF is good for Bitcoin and the crypto asset class as a whole. Saylor talked about the effects of the SEC's approval on the What Bitcoin Did show. He said that it makes it okay to use crypto for things like tokens, NFTs, and DeFi, creating a new type of asset. He thinks Bitcoin will be the leader in this new type of asset and that it will gain from more political and legal support. Based on data from the blockchain, the MT, GOX funds, which used to be held in one address, holding over $9.6 billion in Bitcoin, have been split up and sent to 3 different accounts as of Tuesday morning. Arkham Intelligence also says that Donald Trump's cryptocurrency holdings have grown to over $10 million, with the Trump coin being the main driver. Because of this, I asked myself over the weekend, okay, so where would these lines make the most sense? And what I came up with is this comparison where you're taking your exact low. I'll bring up my drawing tool once more. You get your exact low point right here to right here to right here and then right up here. Then look at how we broke above, then stop right there, touched it right here, and it stopped above. So this is what makes the most sense to me, at least when it comes to the art of trend line drawing and channel line drawing. That's where I'm going with it now. This is because, as I said last week, Bitcoin's charts will stay strong as long as we stay above this line and don't close below it every day. In other words, the numbers don't care. They are not biased. They have no idea what to do. The story they're trying to tell isn't true. Things are the way they are. And right now we had the route that went down. Remember what I told you, channels that go down usually break up. Not all the time, but about 7 out of 10 times, channels that go downhill break to the bottom. Keep in mind that this is just a guess. Please excuse me, here is the good news. This one broke on the top. That's one reason for the bigger chance. Remember, upward sloping lines, like we saw on the 10-year yield chart, which looked like this for 10 years, most of the time they break down, in the same way the 10-year yield changed. We could even talk about that chart if I have time. I don't think we will. Of course, my point is still that the most likely result at this point is still that prices will go up as long as we stay here and don't start closing back into this channel. When you look at Ethereum, it keeps trying to reach that double top. We know that this channel breakout was beautiful, and it was a great breakout. I mean, this kind of spectacular breakout doesn't happen very often. This is a really great breakout. This high pivot up here at about 4,100 hasn't even been tried yet, which I find interesting. To find out more, click here. I believe that is a chance that we could hit. I really believe we could go through it and reach as high as 4,200. However, I will say that if we hit 4,200 this week, I would start to think about taking a short. Okay, remember that I only trade for short periods of time, so this has nothing to do with how I feel about Ethereum in the long run. I could be wrong and say it's 10,000 in 2 years. I trade for short periods of time and look for moves here and then a quick move here. For the record, I take my money and run away, just to be clear, so Ethereum fans don't send me hate mail. Now let's look at the gold chart. This trend line has been broken to the upside. Keep in mind that we did have news about gold yesterday. We are also up a little today. The question I have is whether we are beginning to see a downward consolidation in oil prices. I'm sorry, on gold. That's what I mean. Since we broke through this line, are we now beginning to do this and stay below it for a dip? That's something I don't know. This would be called a weak pattern for the odds. That means the pattern isn't fully grown yet. The only difference between immature and mature is that the odds for immature are equal to each other. After a while, you start shading more in one way, about 70% to 30%. And this pattern isn't fully formed yet. Right now, if we stay below, it will grow up in a few days, and you'll start to favor the fall. As a side point, PCE data will be released on Friday. Do we keep going like this through Friday? Does this set the stage for a gold price drop or rise? Do we break up? It's the SPY, which stands for the SP before the market opens. Once more, an ETF called the SPY follows the SP. A lot of people do that instead of having a futures account and trading the SP futures. Okay, this shows that the market pretty much ended the day well on Friday. After that, we saw this happen, right? This is where we closed on Friday night. The market was flat. The next day, Tuesday, we got up early and left at 4 a.m. That's when the futures, the futures are open overnight. It's when the pre-market can trade though. This market was set up by the big boys, as we can see. I think it's so they can dump in public, where regular people can buy at a higher price. The price has gone back up a little and is now staying the same, but it was still higher than it was in the morning. Okay, some stocks are moving, but let's talk about what I promised the SP 500 and why it makes sense for it to drop 43%. I'm sitting there this weekend with my family and kids, having a great time, but I just can't help it. I find myself coming back to the charts because they show me things that blow my mind every time I look at them. This is one of them that I found over the weekend. What do we plan to do? This is your SP 500 chart from the high point in 2007 to now, right? Here is your high point in 2007 and your low point in 2009. Take a look at the link here. If you look at this chart, you can see that the secondary high for 2021 was around 533 points on the spiders and 5,300 points and change on the SP. As of Friday, we hit this trend line for the third time. Are we going to break it? We'll find out, but that's not what I want to show you right now. Next, we connect that 2009 low to the COVID low. To show you what I mean, let's look at the drop here during the Great Recession and the drop here during our next week market, which ran from late 2021 to October 2022. We want to find out what percentages these drops are.